All right, folks, so my next guest says that, quote, in the final analysis, long-term investors need to remain focused and balanced. Building a strong, well-diversified portfolio takes time and commitment. Let's bring in a man himself, Kenny Polcari, SlateStone Wealth Chief Market Strategist. Kenny, welcome to the show.
It's a pleasure to be here.
All right, so yesterday, let's just talk the last couple of weeks, the conversation I had with Bob. This rotation, yesterday's winner could be today's loser, and vice versa. How do you stay committed in that sort of environment?
So you have to stay committed by making sure you have the plan, right? The plan is what's going to help you stay committed versus making haphazard decisions from one day to the next as a long-term investor. If you're a day trader, you're going to make decisions all day long, every day in the chaos. But if you're trying to focus as a long-term investor and build a plan and build a portfolio, then you have to start with the plan in order to keep you committed.
Right. So I've got the plan, and like Mike Tyson, I got punched in the nose.
Right.
All of a sudden, I don't even remember what the hell the plan is.
But that's okay, because you're going to get punched in the nose every once in a while, which is why I say, like, when we see tech had come under pressure a couple of weeks ago and people going, oh my God, I got to sell my tech, I got to sell my Nvidia. Why would you do that if you're a long-term investor? You can't look at the next 48 hours or 72 hours or even the next month. You're looking out 4, 5, 6 years. So how does that stock play in that portfolio in terms of a long-term? And it may feel uncomfortable on some days, but look what's happened. Nvidia is the perfect example, right? It was down 30% just a couple of weeks ago. It's trading back at $121 today.
There's a lot of noise out there, though, right? On one hand, we want people to watch this show. We want them to be self-educated. But as you go along the process, there's a lot of voices out there. And on any given day, someone's going to tell you what you own is junk.
That's right. And so that's part of what you have to eliminate, right? Sometimes long-term investors, you have to eliminate the noise and not listen. As long as either you've done your own homework and you know what you own and why you own it, or your advisor, you're comfortable with what your advisor has done, then you should be good.
Let's talk about the other noise out there. The economy, the Federal Reserve. Breaking news. This broke about an hour ago. The U.S. budget, now debt interest payments, we've surpassed $1 trillion for the first time in a fiscal year. In a fiscal year. Wow. So the budget gap surges 24%. This is October through August. The Federal Reserve has got to act here. The economy.
So this is going to be the problem, right? The Federal Reserve and Janet Yellen's going to have to act here because someone's going to pay for this, right? They've got to bring supply to the market in order to pay for this. And more supply to the market is going to depress prices. And what's that going to do on the other end? It's going to cause rates to go higher, right? If she has to bring more supply to the market to pay for this.
But they can't bring in. If they brought in $5 trillion, they'd spend $10 trillion. If they brought in $10 trillion, they'd spend $30 trillion.
100%. So you got to try to rein them in, which doesn't appear to be possible at the moment because both sides want to spend more money, which is a little bit unnerving anyway as an investor, and really as an American, it's unnerving.
What are you buying here?
So I'm buying Nvidia again, right? When it broke down, we bought it. ASML is another name that people should look at. If you like Nvidia, you got to love ASML, right? Because ASML produces that lithography, which really produces those high-end, very energy-efficient chips that places like Taiwan Semi and AMD all use.
And we should point out they have a monopoly.
And they do, and they're also down 30% from the summer high. They were trading at 1,100. Today they're trading at 800, about 800. They were traded down to 750, where we actually added some to the portfolio. Below 8 would be a buyer of ASML. But it's a name that you should certainly look at. And Amgen has a very interesting story there with their MeriPath GLP-1 drug, right? Because instead of being a weekly injection, it's a monthly injection. And now they're also working on a pill versus an injection. And it's in that phase 3 trial. So
whoever gets that pill first, that stock is going to go through the moon.
100%. And this has already started to respond. If you look at it on the chart, it's already started to respond. But as a long-term play, it's another name that we own. And it's also a good divvy play.
Do we put out a sort of a disclaimer of sorts, though, for folks? And it gets back to our original conversation. That these are high beta names. That, if you're in it, you could be down all of a sudden 10%. Don't panic.
100%. But that also speaks to the percentage in your portfolio and who you are in your lifespan. If you're 30 years old and you have a big allocation, that's great. But if you're 60 or 65 or 70, you want to still have exposure, but you don't want it to be so much of your portfolio that if it has a couple of rough days, it's not going to kill you.
Understand all that stuff. You're looking great, my man.
It's always a pleasure. You do too.
All right.